Well, good morning, everybody. This is John, and the first thing that we're going to talk about today, of course, is our daily positive thought. I thought this was a good quote from General George S. Patton. The test of success is not what you do when you're on top. Success is measured by how high you bounce when you hit bottom. I found that to be kind of funny because here we had the NASDAQ just roar out of the gate yesterday and bounced right off of a confluence of a daily, monthly support. So I don't know if that's going to be the success measurement of how high we bounce off of this low, if that has a lot to do with what General Patton was talking about. But it seemed appropriate for today. We had overnight China unemployment jolts. Charles Blossard speaks today. I think really the main item for the week will be weekly jobs and then a bond auction. Earnings are front and centered. Seriously, Alcoa always begins the earnings season, and so we enter ourselves with the earnings season, and I think Family Dollar Store, Constellation tomorrow, Bed Bath & Beyond, and of course Fastenal, but more importantly J.P. Morgan and Wells Fargo on Friday. We did have some I updated the sheets. In fact, cattle has been in a weekly sell. Hogs are in a weekly low closed doji. Copper has been in a high closed doji. Crude oil is in and has been in a weekly high closed doji for several weeks now. But a last conditional change, we need to see a close below 128 for a potential trend change. Gold has been in a weekly sell signal, but it hit support at that 1280 area that we discussed before I left for vacation. And it needs to break below 1264 before we see any further erosion. Otherwise, resistance is going to be around resistance will be, and I might as well, resistance will be at around 1330 area. The Japanese yen, we have a potential for a weekly last conditional change if we close above 98.13. We talked yesterday's planning and scanning that the Japanese yen is entering a seasonally bullish period, number one. Number two, it is also starting to show some technical strength. Bonds are still in a weekly PPS buy mode. They've been there for several weeks, but it's been in a trading range. And again, we really turned technically price bearish, which needs to be checked and confirmed with advanced decline and volume levels, but if we get below these levels, all right? The YM, I got to change this 15,675 because, boy, I'll tell you what, if the YM gets way down there, but let's take a look together. It's really the last conditional change on a closing basis below this last conditional change on a weekly basis, and both moving averages. It's really 15,859. So if you'd like to change your sheets to reflect 15,859, that would be appropriate. Okay, or until we get a potential weekly sell signal, and that won't be just any sell signal. We would generate a low close doji if we closed below 2 weeks ago's low, which was a doji. So we are at a price situation where the markets are demonstrating, without a doubt, a reason to be extremely cautious. However, the advanced decline to the upside broke out, and the volume broke out to the upside. So it's going to take a lot to get this market. It might need more than just 1 or 2 weeks of downside move to change the technical landscape in that market. We enter a seasonally strong period of time, as we also discussed yesterday in the index XCI, which is the internet space. And we went through the top components yesterday of the XCI, and these were the stocks we came up with. I put them on the list. Today, I also wanted to review with you stocks that are down 20 to 40% from their highs. Amazon, Yelp, Twitter, Pandora, Facebook, LifeLock, and Groupon. And I want to go over some of those names because even while they're not in this space, Amazon might be due for a small dead cat bounce. Facebook certainly might be a good candidate for a credit put spread, and we're going to talk about that today, along with LifeLock, Groupon, Yelp, and Twitter. Okay? So let's take a look briefly at the markets and what kind of where we are at. The top row, as you can see, are daily charts, and as it's clearly identified, we are trading near monthly, the new month, I mean, in just 3 days, or mostly just actually 2 trading days, we went down to test the monthly support from Friday's reversal off the high. Quarterly support, the charts below are the weekly charts with quarterly pivots, okay? As you can see, the quarterly pivot, it's kind of an intriguing scenario because we really didn't change the quarterly targets to the high, and the low was predicted to be a higher low. So from a longer term perspective, the E-mini S&P is still, or the S&P 500 is still in a bullish bias, but we are generating a potential weekly sell signal near here. Taking a look at the technicals, we do see that we get a little sell-off going into the end of this week. See if you can take a look down here with me on this little seasonal trend. So I have my eye on that, and basically, as price, let me expand this. As you can see, we never really made a new closing weekly high for the last 1, 2, 3, 4. This would be the 5th week. We never made a new closing week high. So you can't count this as a bearish divergence because the price never made a high. But what happened is advancing stocks maintained their positive growth. The volume did not make any acceleration to the upside because price did not make any acceleration to the upside. We do come into a little seasonal decline, a dip, and then you have one more upsurge, as you can see here, that lasts going into the beginning of May, which can last sometimes to the end of May, actually, into the May expiration. So as I would, that's why I have this arrow lined up there. So the question begs, is this the time to throw the baby in the bathwater out? Eventually we will, but I think right now, I'm based on the weekly analysis, my longer term analysis, the New York Stock Exchange Composite Index, way too strong as far as advancing stocks outweighing declining stocks, as well as the volume. And the Dow doesn't really reflect anything. So I think this week will be an important tell. And one of the things that I think is really important to make sure we monitor is that we get this typical seasonal sell-off that we definitely warned about. I mean, there's no doubt. I don't think anyone in this room, if you paid attention, if you listened, there's no doubt that I said the NASDAQ, due to the weight of biotech, has a nasty spill. So it's a sector rotational pull on the market. That was the theme that we talked about for quite some time. Okay, so now the market's down here, and yes, while they took, besides the biotech, they took a lot of the high-flying momentum names, as we've, which is on your sheet. Your Amazon, your Yelp, your Twitters, your Pandora, your Facebook, your LifeLock, your Groupon. They just took the air and just grabbed the carpet out from under those. So what's really changed? Has Facebook been replaced with a new thing? Is LifeLock was it overvalued? Groupon, I never use it personally. I probably should. Twitter, I do tweet, so I don't know what their profit. I never could get involved in that up there. And so, but what I have to say is we have a very strong annual low that tends to be marked right before tax time, which is the end of this week, by the way. So I have to respect that seasonality, and I have to respect the fact that if this sell-off was so dynamic, why isn't the advanced decline more pronounced to the downside? And where's the weekly volume? So this week will be very critical and important. And like I said yesterday, if we do crash and burn, let's take a look at something real quick together. If this market is going to crash and burn, let me go to a monthly chart. I mean, and I'm going to get rid of all the pivots here. If this market is going to crash and burn, I mean, let's face facts. There's a lot of room between where we are now and where the market could go if it wanted to return to trend. And trend would be probably against those old highs, somewhere down there. That would be a nasty sell-off. So let's get it right. Let's not just get bearish and pick a top. I think the best is to say, hey, listen, maybe at the very least we went from a very strong uptrend, and perhaps maybe there's a small chance we're going to go into a consolidation phase before this thing rolls over to the downside. Okay? So I think that's one of the key elements that we need to really respect in the market. And I think right now, I still believe that the market is still acting longer term, or let me rephrase, intermediate term. Intermediate term is between now and the next 6 to 8 weeks. Do I think there's going to be a correction? listen, I just hit the recorder so you can replay this. I absolutely feel there will be a correction. I just don't see it in the cards right now. We need more work. Tops take longer to form than bottoms, and if you folks take a look at this chart with me, and this is the NASDAQ, this is the ugliest stock sector that we have on the planet right now, next to maybe Latin America and emerging stocks. I mean, it was a nasty little sell-off, according to my emails, and I mean, they're just, the headlines capture my attention. Is the NASDAQ done selling off? Is it over? You know, I don't read into them, but I just say that a lot of people are following it. And with that said, I just can't, knowing the pattern that we typically go from strong trend up, it's going to take a lot more than just what I feel from 3749 to 3500. Yeah, granted, that's 200 NASDAQ points, but it's going to take a lot more work to get this thing to go down. Besides, we still need to break below a last conditional change candle. We don't even have, and this is a monthly chart now, so for longer term analysis, I just don't have a topping factor in the market. This is that area that we're going to have to break before I say, hey guys, boy, maybe we should have picked a top. But I just don't think that this is the time to be picking tops. Besides, if this market is going to start to develop a rounding top, I think we have over in time, probably in May, early June, one more advance to the upside. And time will tell if I am right. But I do believe that we have a lot of names that are not adhering and that are in the NASDAQ, as we talked yesterday, like IBM, like Cisco. There are some valid companies that produce something that service the world, that does generate growth and income, and they are not participating in the sell-off. In fact, they're doing the opposite. They're actually rallying. So, I mean, if it's any consolation, how does this help us from day trading perspective? I think we need to be on guard that if the market is going to just simply digest this little down hickey, it's not going to do a two-day move and reverse right back up. So I think this week is going to remain very choppy. But I wanted to address the intermediate term, and I wanted to address some of the overall market conditions based on yesterday's price action, because yesterday we did see an amazing tumble to the downside in the marketplace, but we also saw the NASDAQ found some buyers down there near support. I firmly believe that we still have support into the market. You know, maybe we do one of these things in the S&Ps. When I say one of these things, maybe we come down and form shadows. I mean, if you take a look at where we have all these long shadows, I mean, take a look at this, okay? So we have a shadow, we have shadows, we have shadows, we have shadows. You have shadows down here. You have shadows, you have shadows. This is all buying tails. So this is all buying interest in this green zone right here. So in order for me to really get bearish, don't you think we need to break that green zone? So maybe we're just in a trading range and we tested the top of the range, and in 2 days they sucked the life out of everybody. And, you know, it's what the market's been known for. Yesterday I also made mention that when we had the January swoon after the first of the year, profit-taking correction, we had a little bit different makeup in regards to the volume analysis as well as the advanced decline. And I just don't have that right now, even though we had a 2-day decline that was fairly massive, and we are below prior lows. We didn't make, if I compare an apple to an apple, once again, and I hate to tell you this, but you could go check the data yourself, but just by a quick eye, if we took the market, which at this day right here closed at 1843, so, you know, for quick government work, there's 1843. Yesterday, the market closed at 1839.5. Well, I'll just leave it at 1840 just for government, you know, just to make it easy on me. So comparing an apple to an apple, yesterday's close was lower than the prior day's low. Why isn't the advanced decline lower as well? So to me, yesterday may have been a tell with the volume analysis as well. Did not make newer lows than this little sell-off right here. I mean, that little sell-off, look what the volume did. How come in a 2-day massive decline did we not get a major volume erosion? So I have to say that, you know, from here, being at monthly support, the first test of any major support, generally the market sees at least a stall or a bounce. Yesterday I was talking about the gap between price, where the market was at, and the moving averages. So we'll probably get a couple-day, you know, generation of sideways action. the fact that we are, by the end of this week, coming into a seasonal strong period for the NASDAQ or high-tech stocks or internet-based stocks, which is why I put those top components on your daily sheets, I will be looking for signs of a reversal, at least for the market to come back up into the 18. I think it makes sense that we come back into this level up in here. These were the old highs, and if it tries to test that area one more time and can't break it, then there's just more sideways grinding, which means more trading action, more volatility. But I think at this point in time, I want all my students to really start focusing on volume and advanced decline market internal analysis and paying attention to the market internal analysis on the NASDAQ or the NYSE as well as the NASDAQ. That's going to be paramount. All right? So with that said, let me go over to our day trading page. And go. Actually, I'm going to go to my multi-time page. And I'm going to give you my levels for the day. And we'll cover market one by one. So, crude oil. Crude oil today, this is a daily chart, of course. Crude oil today, the other day formed a high closed doji. It looks like this market's getting ready, and it could possibly being ready for a setup if we get a close above this last conditional change candle. This high particularly was 101.57. If you get a close and pop above there, this looks to me, that we just did one thing. Trend, consolidated, and maybe we're going to resume that trend. We are in a seasonally strong period of time, and the volume, we didn't see a lot of major destruction on any correction on heavy volume, and we're right back again to the areas of value in here. So more, if you can see what I'm referring to, area of value, this is like the average volume. That's why we're sitting right at this zone. So with that said, to me, it looks like crude oil is actually fair valued. It's not overvalued. It's not undervalued. So it is getting ready for a potential pop. And if I have to say from a consolidation factor, as that's the high and that's the low. So if we're consolidating and it's in a range, let's call it, and there's your range. So for the last few days, if it's in a range, I'm going to have to go with trend, consolidation, resumption of trend, only because I would put it at a 60-40 chance that the market goes up. And the true tell will be if we take out that 101.57 on a closing basis that we go up. Why is it 60-40 and not 50-50? Because seasonally it's in a strong time period. All right, stochastics is not overbought, and the volume action is neutral. So all I can say is, just like over here, we had this same type of analysis. If it takes out a last conditional change candle and hits and it takes out, it's going to go up, and that's the same thing I can just point out to you here on crude oil. All right. So with crude oil breakouts, we're not that far away. 101.18. What do we have tomorrow? An energy report. So it could be one of these all or none type of deals. From a day trade perspective, though, we are at or just slightly above the daily targeted pivot resistance. All right. I think you're going to see any break, if it does have a break, any break to maybe, if there is, and that it's a big if, but I would have to say if you took the midpoint of this breakout, look how the market came down and it came back up. So, right around 170, just above that area, that might be a supporting target. If it breaks pivot, if it breaks to the daily pivot, then we have to re-examine the bullish side. As again, it's difficult to buy a market at daily pivot resistance when most of the price action occurred, obviously, overnight. So once again, the Europeans took a leg up on us. All right, so let's take a look at ES. What is my game plan for today? Like the NASDAQ yesterday, I said, man, you just can't really take any long positions until we break back out above in the NASDAQ. I think my comment specifically was it needed to get above 35, 34 and a half, or maybe let's round up and say 35, 35. For the S&Ps, I really have to say the same thing. I really can't get long this market until we get back above this swing high and that pivot. That was the market fell down, it rallied and it failed. It's tried to come up again, and the market's failed. Even though we do have, and this is a 60-minute high close doji, I know that's a world away, between 39 and 46. It's not really that far. But I tell you what, this market to me seems like it still needs, it's not going to be a V bottom. It's Tuesday turnaround, so you might have a slight uptick. But boy, I'm going to see lower levels with a shorter term buy signal somewhere down around, like, maybe the supporting target for me would be just underneath these lows. And I think we might have done it with, some fresh stop hunting. But if by 10:30 in the morning we can't get underneath this 60-minute doji low in the marketplace and we start to linger in there, then I'd have to say odds favor the fact that we will get a rally attempt. To get long the market, it needs to get back above that 47. So it's a day trader's volatility heaven, so to speak. It's going to be quick scalping, and that's what I think the market's going to do, as it needs to fill in time to allow for that moving average to catch up to price. One of two things are going to happen. Either the market internals are going to change, and this thing's going to turn dramatically bearish over time, and then we'll know it, and we'll be on it, and we'll sense it. Or the market's just going to kind of build, and we're going to start to see accumulation in the marketplace, and therefore come back and try to test the highs one more time. Today, though, and tomorrow, I feel that we probably stay in a trading range zone because we just had too much technical damage over 2 days, and there's still people out there that feel that this is a buying opportunity. And when you take a look at certain stocks that are down 40% of their highs, it does make sense to nibble on some of these moves. Let's take a look at bonds real quick. Yesterday gave a nice tell on the bonds. When the market, when the S&Ps were making new lows on the day, bonds were not making new highs. So you're back on to watching the bond market. The bond market, though, unfortunately generated a daily buy signal. But, when we do generate daily buy signals, the bond market, truthfully, does seem to be in a little bit of a range. So in here, unless we get a close below this swing low, or last conditional change, which is 131, we're just in a range-bound market. And here's my definition of a range-bound market. When I look at another trade opportunity in the knob spread, I think that was my last kind of overnight trade that we did, or we talked about in this room, and we gave to everybody, served it to you on a silver platter. And I do know a lot of people said to me, privately, I didn't understand it, I didn't do it, but I liked it, and I want to learn more. And that's all I can ask of anyone is, hey, I liked your analysis, I didn't do it, I'm new to this, and I want to learn more. I wasn't comfortable, but I want to learn more. That's all it takes. That's all I want to hear. I want to learn more. And so when I see more of these other setups, I will pass those on to you. All right. As far as day trading, do be on alert that the market did generate a PPS daily buy signal in the bonds. And so I think with that said, there's going to be, we could probably understand why there's a buy signal in the bonds. There's probably some hedging going on because we have a 30-year bond auction this week. So people are we've got a little conflicting information. We've got a downgraded equity market by many analysts, number one. Number two, you got a bond auction, and number three, you have a seasonal time frame. Selling may go away. We're 30 days to 45 days out from when the stock market has its worst time of the year, and people start to float and generate and gyrate into the bond market, all right, to hide for shelter over the summer. So with that said, we got to be on guard, and for today, I think dips will absolutely be held in this market. They're not going to just, I'd be very shocked to see this thing just roll over and die, so to speak, okay? Now, we've covered crude oil. Let me go through gold as the last one. And, no, I got gold and I've got the Japanese yen. In gold, the gold market, we had this kind of line in the sand, and I've got resistance up here at around the 1330 level. I still think gold might have another move to the upside. Again, overnight, we just saw a breakout at about 2 in the morning. They loved, the Europeans had a great time while we were sleeping. As you can see, gold, crude oil, et cetera, et cetera. So as far as gold is concerned, it's going to be kind of tough to look at the gold market after it's just had, if you think about it, a $10 range, or at least $15 range to the upside. 2 bars straight up, caught. It's like all or none. Once again, it just moves all at once and then nothing. The gold market, I think, can still see upside and be, still in a weekly, as we can show you here. It's still in a weekly sell mode. The upside target is that black line in the sand. That's near 1320 up to 1330, which is the yellow line. That's an area of resistance in the gold market. Now, again, this is not day trade. That's, what I think over the next couple days. But if we do see a pop up into that zone, as you can see on the weekly moving averages, old lows, I mean, you can see this black line where it just had old hot lows, et cetera, et cetera. You can see where traders will be apprehensive to, to be buying up in here. I think anyone that had the fortitude to be buying gold down there will probably be taking a quick profit up there. So the first test of resistance, just like the first test of support, always offers a potential trade opportunity. So just keep that in mind at that level. All right, last but not least, I want to look at the Japanese yen. As we talked about yesterday, the Japanese yen, and I know we had a high close doji. It was on your sheets, I believe, if I'm not mistaken. We talked about it yesterday, and we did generate a daily PPS buy signal. And again, I'm not sure what happened. 2, 3 o'clock in the morning, the yen's off and running. What do we do with this thing now? It's like one of these all or none. We unfortunately, it's done. Okay, for the time being. Pullbacks will probably pullbacks around in this area. You're going to have to look for a pullback in the Japanese yen, probably closer to 97.30, which is actually today's daily. 30 to 40 is today's daily pivot resistance. I wouldn't touch this thing on the short side with your money. All right, that on-balance volume is way too strong. It enters a seasonal strong period of time. Look for a pullback over the next couple days. I just can't bring myself, unless we really break. It's in a nice 45-degree angle. It may just, pause up in here. But it looks like, at least the trade, we had the interesting, I think sure everyone was here yesterday, remembers where I talked about the Japanese yen. And that the potential for an upside surprise sneak attack. And, well, so there it is. All right. I'm going to stop with our announcements. Let's get into our Toss Tuesday real quick. I know the market is opening. Real simple. How do you get a pivot point up for an intraday basis? So I've got the NASDAQ. So we go up to studies, and I'm going to add a study. You got 2 ways to do it. You can go look for my name, which is John Person, and you can click on PPS as the buy and sell or bullish and bearish momentum. Those are the arrows, which are very crisp and clean and clear. Orange is sell, blue is buy or bullish and bearish, or Person's pivots. So when you click on Person's pivots, it will populate by default the daily pivots. So you have to go to studies, and I'm wearing headsets, and that was the opening bell in my head. That was fun. I forgot all about that. All right, so you go to studies and you enter studies. All right, now I have it twice. So I click on this and I can remove it. I still have it. I click so once again, let me show you. Go to studies, edit studies. Okay? So once you do that, you go over here and you go to the little wheel, that little wheel. Click on it, and another drop-down box, customizable box comes. And as you can see where it says time frame, see a little corner is a drop-down menu. You have daily. You can add the 2 days, which we put in, the 3-day average, the 4 days, which takes 4 days of pivots, just in case you wanted to cheat. Weekly, monthly, option expiration. So what I like to do is when I'm day trading, I like to have the day charts, but I'm also very aware of the monthly pivots. All right? So I put the monthly, I hit apply, and I hit OK. And as you'll notice that right now, it says at the very top, person's pivot month. Everyone can see that. So now if I change this from a 15-minute chart to a daily chart, you can see that I've just gotten down to the monthly pivot support. So we're not just at daily support, we're at monthly. Not all the time does the monthly hold exactly to the tick, but it's been very, through time, the monthly numbers have been very effective in this market, as you can see. 1, close to, exactly, almost. And here we are just a little bit, yesterday traded just a little bit through it. So with that said, we have a confluence between daily and monthly pivot support. Personally, I think the market had a lot of, on an intraday basis yesterday, which is kind of interesting. The market had the first test of the monthly pivot, and it popped up, right? And then it just went into that slow grind all day yesterday. And that's why I wasn't interested in getting long the market unless we got back above the swing high, which I believe was around 30. I thought it was around 34 yesterday, somewhere above this handle in there. I just wanted above those levels. Now for today, if you see what happened, the market came back down a second time and then shot down. And then it was like someone in the room, I think one of our students said, boy, it's like paint drying. And remember, the markets like to do one of two things: scare you out of the market or bore you out of the market. The on-balance volume, without a doubt, as you can see on my charts, I always have it by default on there. We started to see an uptick in the market, a PPS buy, but for most people, by the time that was generated a buy, 34.94 down to 74, a 20-cent, a $400 risk may have been a little too much. All right, so what are we going to do for today? I think we have chop and slop for today. Obviously, there was a lot of interest. If you take a look at down in this zone here, all right, this is the last conditional change in both moving averages. So I want to see what happens at around 91 if the market does get down to 91. Take out the intraday low, see what happens down in there, and look for a short-term buy signal down into this zone here. It was right about there, 87 or so, 86, somewhere in this zone here. That's where the market kind of broke out. It's also, if you take a look, where the market stalled, you know, so there was some tippy-toeing in the market at this zone. If there is a shot, which there might not be, that the market wants to test that low later today, then I'm not really looking all that excited about, unless you're just interested in a scalp here, all right? I think this is an area of the marketplace where the first test of that high, which was around 22, 21, something like that, this is the NASDAQ, of course, the market may want to test. Remember, there's some bottom pickers. I didn't go over all the markets, so let me just go back through studies. Let me go to edit studies. I got monthly here. I go to the wheel. I change the wheel. I go to the drop down, and I go back to day, and I hit OK. I apply it, OK again. And that is a wrap. So I have recorded this. We will record it again and put it on, and you guys can watch this. Just give us some time. So with that said, I hope everyone enjoyed this morning's presentation, and we'll do it again. Tuesday is Toss Tuesdays here at Trading Trigger University. Every Tuesday, not only we cover the markets before they open, we cover certain features on Thinkorswim platform that will help all of you guys. Thank you very much, and let's have a great trading day. Thank you.